Preparing for a Geneva Platform interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What is the Geneva Platform, and why is it widely used in investment accounting? Geneva is an investment accounting platform used to maintain books and records for portfolios across asset classes. I think of it as the system that connects trades, positions, cash, pricing, corporate actions, profit and loss, and reporting. It is popular because it supports complex instruments, multiple accounting bases, and detailed lot-level records. For fund accounting teams, Geneva helps produce accurate NAV inputs and gives operations teams a strong audit trail, from transaction capture to final reports. While answering, focus on Geneva as an investment accounting and portfolio management platform. Its multi-asset coverage, transaction-level accounting, NAV support, reporting flexibility, and relevance for hedge funds, asset managers, and fund administrators. Question 2. Walk me through the typical trade lifecycle in Geneva. A trade usually enters Geneva through manual input, file upload, or an upstream order management interface. Once captured, I check key economics such as security, quantity, price, trade date, settlement date, broker, and portfolio. Geneva then posts the trade, updates positions, creates cash movements, and feeds profit and loss. After that, I reconcile against broker or custodian data. Any breaks need investigation before NAV finalization, because a trade error can flow into cash, exposure, and performance. Make sure to cover trade capture, validation, posting, position and cash impact, reconciliation, exception review, downstream reporting, and how errors in trade setup can affect NAV and performance calculations. Question 3. How would you investigate a position break between Geneva and a custodian statement? I start by confirming the break is real. Same portfolio, security identifier, quantity basis, and date. Then I compare Geneva activity against custodian activity, from the last match date to the break date. Common causes are missing trades, cancellations, corporate actions, transfers, or timing differences around settlement. If quantity matches but value differs, I move to price or FX checks. I document the root cause, correct Geneva if needed, and ensure the fix flows through reports. In your answer, talk about comparing trade activity, corporate actions, settlement timing, transfers, cancellations, security identifiers, and using reports or extracts to isolate the source of the position difference. Question 4. What are tax lots in Geneva, and why do they matter? Tax lots are the detailed cost layers behind a position. If a fund buys 100 shares at 50 and later 100 shares at 60, Geneva keeps those lots separately unless the accounting method aggregates them. When part of the position is sold, the selected lot determines realized gain or loss. That matters for accurate profit and loss, tax reporting, and audit support. In interviews, I would stress that lots connect trade history to realized performance. Be sure to mention lot-level accounting, realized versus unrealized gains, cost basis methods, partial sales, audit support, and how tax lots affect performance, accounting, and investor reporting. Question 5. How does Geneva calculate realized and unrealized profit and loss? Realized profit and loss comes from closing or reducing positions and comparing sale proceeds with the relevant cost basis. Unrealized profit and loss comes from marking open positions to current market prices. In Geneva, this depends heavily on correct trades, lots, prices, FX rates, and corporate actions. For multi-currency portfolios, local profit and loss and FX translation can both matter. I usually explain profit and loss as a bridge: beginning value, activity, income, market movement, FX, and ending value. While answering, focus on cost basis, market value, realized gains on closed lots, unrealized gains on open positions, FX impact, income components, and the importance of correct pricing and transaction data. Question 6. What checks would you perform before signing off the Geneva-based NAV package? Before NAV sign-off, I would run a structured checklist. First, confirm all trades are booked and reconciled. Second, check positions in cash against custodians or prime brokers. Third, validate prices, FX rates, corporate actions, income, and expenses. I would also review daily or monthly profit and loss for unusual moves and explain material variances. Finally, I make sure reports tie together: trial balance, position report, cash report, and investor or client NAV output. Make sure to cover trade, cash, position, pricing, FX, income, expense accrual, corporate action, profit and loss reasonableness, and reconciliation checks before NAV release or client reporting. Question 7. How are corporate actions handled in Geneva? Corporate actions in Geneva must be booked with the right event type, effective date, payable date, and eligible holdings. Simple events include cash dividends and stock splits. More complex ones include mergers, spin-offs, rights issues, and optional elections. The key is understanding both the economic event and the accounting entries Geneva generates. After processing, I would reconcile new positions, cash entitlements, income, and cost basis to custodian records and market announcements. In your answer, talk about mandatory versus voluntary events, dividends, splits, mergers, spin-offs, entitlements, effective dates, position eligibility, accounting impact, and post-event reconciliation. Question 8. How would you troubleshoot an incorrect market value in Geneva? I break market value into components: quantity times price, adjusted for factor, multiplier, accrued interest if relevant, and FX translation. First, I check whether the quantity is correct. If it is, I review the price, price date, pricing source, and security setup. For bonds or derivatives, factors and contract multipliers can drive big differences. For foreign assets, FX rates may be the issue. This approach separates position problems from valuation problems quickly. Be sure to mention checking quantity, price, price date, pricing source, factor, multiplier, FX rate, accrued interest, security setup, and whether the issue is valuation or position-driven. Question 9. What Geneva reports or outputs have you used, and how do they support fund accounting? The most useful Geneva outputs are position, cash, transaction, profit and loss, realized gain-loss, income, pricing, and trial balance reports. Each report answers a different control question. Positions confirm holdings. Cash reports support liquidity and reconciliation. Transactions explain movement, and trial balance supports accounting close. For NAV work, I like reports that can be tied together rather than viewed in isolation. A strong candidate should show they understand both report generation and report validation. While answering, focus on position reports, cash reports, transaction reports, trial balance, profit and loss, realized gain or loss, pricing, income, and reconciliation outputs used for NAV and audit support. Question 10. How does Geneva handle multi-currency portfolios? Geneva tracks activity in local currency and translates it into the portfolio or book-based currency using FX rates. For example, a euro equity held in a USD fund has local price movement and EUR-USD translation impact. Cash balances also remain currency-specific, so FX trades and settlements must be checked carefully. I would review local market value, base market value, realized FX, unrealized FX, and cash by currency to ensure the NAV reflects both asset performance and currency movement. Make sure to discuss local currency, book or base currency, FX rates, realized and unrealized FX, cash balances by currency, translation effects, and reconciliation against custodian and NAV reporting. Question 11. What are common Geneva setup issues that can create accounting errors? Many Geneva issues start with static data. If the security currency, multiplier, coupon, maturity, factor, or asset type is wrong, the platform may calculate market value, accruals, or profit and loss incorrectly. Portfolio setup can also matter, especially base currency, accounting basis, and reporting configuration. Even broker or custodian mapping can create reconciliation breaks. My approach is to treat setup as a control point, not admin work, because one bad field can affect the full accounting chain. In your answer, talk about incorrect security master data, asset type, multiplier, coupon, maturity, country, currency, accounting treatment, portfolio configuration, broker codes, and downstream reporting classifications. Question 12. How would you explain Geneva reconciliation to someone new on the team? Reconciliation is the process of proving Geneva agrees with independent external records, usually from custodians, administrators, prime brokers, or counterparties. I would explain it in 4 buckets: positions, cash, trades, and income. If there is a break, we identify whether Geneva is missing something, the external source is delayed, or the difference is due to timing or methodology. The goal is not just to clear breaks, but to protect NAV accuracy and maintain an audit trail. Be sure to cover the purpose of reconciliation: matching Geneva books to external records, position, cash, trade and income breaks, root cause analysis, resolution ownership, and documentation. Question 13. How are fixed income securities typically accounted for in Geneva? Fixed income accounting in Geneva depends on clean setup. The bond needs correct coupon, maturity, day count, payment frequency, factor, currency, and pricing convention. Geneva can then calculate accrued interest, income, amortization or accretion if configured, and market value. One interview point I would highlight is clean versus dirty price. The accounting impact changes if accrued interest is embedded or separate. For bonds, small setup errors can create recurring income and valuation breaks. While answering, focus on bond setup, coupon schedules, accrued interest, amortization or accretion, clean versus dirty price, maturity, calls, factors, income recognition, and valuation checks. Question 14. Describe a time-sensitive month-end close process using Geneva. At month-end, I would manage Geneva close through a disciplined sequence. First, confirm trade cutoff and ensure all activity is loaded. Then, reconcile positions, cash and income, process corporate actions, validate prices and FX rates, and book required accruals. After that, I review profit and loss movements and trial balance outputs for reasonableness. Any material exception gets escalated early with evidence. The final step is producing the NAV package and retaining support for audit and client review. Make sure to mention sequencing, cutoff discipline, trade completeness, reconciliations, price validation, accruals, corporate actions, trial balance review, NAV package production, exception escalation, and sign-off controls. Question 15. If a portfolio manager says Geneva profit and loss looks wrong, how would you respond? I would first ask what movement the portfolio manager expected and which security, book, or period looks wrong. Then I would decompose Geneva profit and loss into trade activity, price movement, FX, income, corporate actions, and expenses. That prevents guessing. I would check whether the issue is economic, such as a real market move, or operational, such as a missed price or incorrect trade. Once identified, I would communicate the root cause, correction, and NAV impact clearly. In your answer, talk about staying calm, clarifying the expected result, breaking profit and loss into drivers, reviewing trades, prices, FX, corporate actions, income, fees, and communicating findings clearly. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.